Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive spinning top yesterday as the market once again flirted with the recent lows. Overall, we still have the same core bearish pattern in charge. The January to May 2021 bearish Andrews pitchfork is still driving this market lower. Prices are still just below the middle time mainly, currently at 108.18. Now the key recent action was a combination last Thursday of 1, an immediate countering bearish double, 2, a bearish dark cloud cover pattern, and 3, an outside day, and finally 4, day 3 in a 3-day bearish stick sandwich pattern. Additionally, we also have a mid-February to end of March bearish Andrews pitchfork, which offers a steeper bearish angle of attack. In this one, we are currently in between the upper time, currently 109.14, and the middle time, currently 105.48. So far today, an attempt up to the middle time of the original longer-term bearish Andrews pitchfork, breaching it, but not as effectively as one would have hoped for. Cable, aka sterling against the US dollar. A fourth bearish black crow yesterday and another dip back down to close yet again right on the broken upper trend line, currently at 129.81 of the recent late February to mid-April possible descending triangle pattern. The action since mid-March initially looked like a possible double bottom, but last Thursday we saw the market revert back down with an immediate countering bearish army, which has thus moved the market lower, mostly on the wrong side of the possible descending triangle. Recent action could, I suppose, be seen as a false break higher, but it very much depends if prices hold over on a multiple closing basis, the 130 even area. One other feature which is starting to once again have an impact is the October 2021 to January 2022 mildly bearish shift pitchfork. We've now had 2 consecutive closes below the lower time, currently at 130.26. However, this happened back in the middle of March, and this also happened back in the middle of March, and prices pulled higher thereafter. So I would treat that with a small degree of skepticism. So far today, an attempted pullback up, away from the broken upper trend line of the descending triangle and briefly making up over the lower time of the broken mildly bearish shift pitchfork, but so far not sustaining that move higher, getting caught up in the resistance overhead. Euro sterling. After a pair of indecisive spinning tops, we had a somewhat reactionary bullish opening white Mariposa yesterday. Overall, the market is still within the very large falling wedge pattern, currently 82.03 to 84.89, that I had detailed now for many months. The move back up was as a result of my observation yesterday that the market was having a hard time trying to penetrate the supports of the February 2020 low at 82.79, and also the whole of the 2020 low at 82.74. Meanwhile, there was a congestion area from February 2020 in the 82.99 area, which was penetrated, but the market ended up, interestingly, closing below it. So far today, an attempt higher, utilizing the February 2020 low support at 82.79 as a springboard and pushing up over the congestion at 82.99. But it's sort of semi-stalled at the moment around the 83.14 area, which was yesterday's high. The real next congestion which it needs to test is in the 83.36 area, and as I speak, we look like we might be actually having a go at that to see if it'd be interesting to see what happens when we get there. US dollar against the Indian rupee. A simpler pattern yesterday after the day before yesterday's confusing second consecutive, if higher-tongued, indecisive spinning top, which in a contradictory fashion could also have been seen as a key reversal down. Well, yesterday was a simple bullish white soldier, closing right on the significant 61.8% Fibonacci line above at 76.43. In the bigger picture, get that right, in the bigger picture, the market is still traveling higher in between the lower time, currently 75.78, and the middle time, currently at 77.24 of the January to April bullish Andrews pitchfork, which is seemingly showing the bullish angle of attack of this market. The only issue was how the market stalled at its height yesterday, just before the late March highs in the 76.52 area. You see, if the resistance was broken, you'd only have the March highs in the 76.68 to 76.71 area before a possible test of the 2020 high at 77 even. So far today, a higher open over the 76.43 Fibonacci level, but also a dip below the 76.39 June 2020 high, and all the way down to almost touching the 50% Fibonacci line at 76.20 right now. There's elements of a bearish engulfing pattern building up here at the moment. We'll have to see on that one. US dollar against the Brazilian real. A reactionary bullish harami yesterday after the previous session's bearish black Maribosa, and seemingly tempering the earlier shooting star pattern type 1 bearish from last Thursday. Overall, the market is still hesitating ahead of reaching target X below in the 444.20 area. This is the current target for the 2022 bearish halfway hesitation pattern. The actual current hesitation has now been going on for 2 weeks, ever since the pipe bottom that was formed back in early April. Up until now, the top sign has been held down by the 50% Fibonacci line at 477.54, the big October 2018 to May 2020 move. US dollar against the Mexican peso. An immediate countering combined key reversal up and bullish engulfing pattern yesterday after the previous session's interesting key reversal down. Thus, the market reacted to an attempted move lower by reverting back up over the broken July-based uptrend, currently at 20.0299, and approaching the middle time, currently 20.0979 of the late November 2021 to March 2022 bearish Andrews pitchfork. However, the market didn't quite make it to the middle time and even failed to close over the broken July-based uptrend. Overall, we still have hovering over all of this the late September 2021 to late February 2022 head and shoulders top with a possible primary target X in the 1944.90 area. The secondary target X2 will obviously be a lot harder to achieve, as this is in the 1839.70 area, well off the bottom of my daily chart. Interestingly, so far during April, prices have been held up by the same support area back from 2021, seen between April to June, and earlier between December 2020 to January 2021, all based around the 1970 area. 2 weeks ago, this support caused a weekly key reversal up, but this was countered last week with a move lower, though there is still a lot of 3 steps down and 2 steps up going on right now. Finally, we have a lagging indicator of a dead cross of the short medium moving average, currently 20.3406, pushing down through the ever so slowly falling long moving average, currently 20.4103. This is an interesting situation, as I suspect we may have within the next 2 weeks or so another possible dead cross of the medium moving average, currently at 20.4821, heading possibly down through the long moving average. So far today, a small move either side of yesterday's close, edging over the broken uptrend but coming back towards the open and looking as if it's moved away from being an indecisive spinning top now to a possible, closing black Maribosa. We have to wait and see on this one because it's not doing that much at the moment. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADMISI International Limited. And here comes the final bit.